Persistent Systems is a business in focus because the business has done really well, but is also a stock in focus because the stock came off a little bit after what the managed or what the street believed would come in, maybe didn't come out in the exact way. But it's therefore imperative for us to ask Sandeep Kalra about how does he feel about the business over the course of the next 12 to 24 months at a point of time when the street, whether on IT services or on products, is maybe clouded under a bit of uncertainty. Sandeep, great having you. Thanks for taking the time out. And I must say, I mean, for the Q4 and for the year as well, very decent show, as we do every time. Can we start off with how you thought about the quarter and the year? What are the highlights and were there any missing points according to you?
Sure. First of all, Neeraj, thank you for having me. As far as the quarter and the year gone by are concerned, the quarter was pretty decent. It was 3.4% quarter on quarter, 13.2% year on year, from a same quarter basis, roughly about 311 million, 310.9 to be precise. For the full year, we delivered a growth of about 14.5%, getting us to $1.186 billion. Now, if you look at it for the last 16 quarters, this has been straight, quarters of sequential growth, and we are fairly confident of continuing the growth. Now, obviously, the market environment is such that you have to prioritize whether you want to optimize margins or you want to have a decent growth, decent margins, and as the market demand environment improves, you want to improve on margins. So that's where we are. We had a reasonably decent EBIT. The EBIT came in at 14.45% for the quarter, which is in a very, very narrow band from the last quarter. So that's the broader commentary. Happy to answer any questions.
Okay. So are you saying, therefore, that because... And I know it may not be predictable, but until it becomes predictable, you are happy to let go of a little bit of the margin picture in order to get business, because business might be hard to come by per se.
Yeah. So there are multiple things that are happening in the market specific to Persistent. So as we look back, 4 or 5 years back, we used to be less than $500 million. In the last 5 years, we've come from $481 million to being a firm with a run rate of about $1.2 billion. Now, what that means is our size scale has also given us an opportunity to compete for business in the bigger companies and compete against the bigger peers of ours. So as we look at the current macro environment, our customers are looking at us as a very refreshing challenger, big enough to scale, small enough to care for them. And that's where, we believe this macro gives us a very good opportunity to further establish ourselves in the market. And so if it is a question of having the same margin or a little better margin, but reasonably good growth compared to our competition, compared to the overall segment, we would prioritize getting the growth because margins optimization is a much easier thing to do than getting growth. The last data point on this, if you look at the last 4 years, while we have grown market share, we have delivered significant amount of EPS increase. If one was to look at the EPS side, last 4 years are at 32.9%, 53.1%, 36.9%, and 16.9% on a sequential year basis in terms of even EPS growth. So yes, growth with same margins or better is where the priority is.
And is it possible to kind of guesstimate or forecast, Sandeep, and don't if you cannot, because it is a state of flux, maybe the environment, but would you believe that being able to do what you've done in FY24 over FY23 or an average over the last 3-4 years might be possible over the course of the next 1, 2, or 3 years in terms of revenue?
So look, we don't want to give any forward-looking guidance, but from a possibility perspective, is it possible? It is fairly possible. So if you look at the entire track record of the team that has delivered this at Persistent, so if you look at the relative outperformance itself from the industry, so let's look at that data point as well. So for the last 4 years, if you look at the industry, it has delivered roughly 1.6%, 18.6%, 10%, and roughly 3% growth on an annual basis if you look at our peer set from India. Now, if you look at the Persistent relative outperformance, the relative outperformance at Persistent has been 11.3%, 16.6%, 25.3%, and 11.8% relative to the market. This is the outperformance.
Yeah.
So if you look at our track record, yes, and if you look at the kind of investments that we have done, and that's possibly also keeping our margins at where they are, we have invested in bringing a new chief strategy and growth officer. We have invested in geography-related leadership. We have invested in putting leadership behind the forward-looking technologies like generative AI. We are investing in building IP around all of that. All of that is towards building our firm towards the $2 billion and laying the foundation for a much bigger firm to come much faster than the competition would.
Are you laying out targets by timelines or milestones by when you will reach these aspirational targets, if you will, Sandeep?
Yeah. So Neeraj, we have fairly said over the earnings calls over the last several quarters. Earlier, our target was to reach $1 billion, which we reached ahead of the curve. The next is $2 billion. The next 3 years should see us pretty much reaching the $2 billion that we have as a target. So, and again, all of that is aspirational. It is not a forward-looking guidance.
Yeah,
It's our
yeah.
aspiration to reach. And so far, we have kept up to our aspirations.
Got it. Sandeep, just one quick follow-up, and because I read this in a couple of notes that came in post the call, wherein one of the notes stated that the company is talking about a 200 to 300 basis points margin expansion in the next 2-3 years, but with muted growth in FY25. Have you guided to, or have you spoken about the possibility of muted revenue growth in FY25 or FY24?
No, there is no place that we have talked about any muted growth. I think the reference, I don't know whether it has been taken from a margin perspective. On our earnings call, we have said growth is our first priority. Margin at the same level is what we are looking for. And if we can optimize that, absolutely we'll look to optimize that. So look, first thing is keep the growth engine on because it is our time. It is our, if I may say so, our time has come to take market share from the bigger peers and even some of the mid tiers. So first focus, take market share at the same margin. And then, if we can do more margin than that, absolutely there are people focused in the company on seeing what can be done best from a revenue perspective, different industry verticals, people focus on margins and so on and so forth. So that's where it is.
Okay, just last two questions. Just one, getting a clarity. Sometimes it's a great strategy that in order to get your foot in the door, maybe work on slightly lower or better pricing or competitive pricing, if you will, which in fact might impact margins too. Is that the idea, that get the foot in the door with some of the bigger clients at a better pricing and then expand the share, wallet share, if you will? No.
No. So Persistent is not going to be a pricing led kind of a company. It has never been, it will not be. Our thing is capability led. We are very differentiated in digital engineering. We are very differentiated in AI. Now, increasingly in generative AI, we are differentiated in things like CX around Salesforce platform, cloud infrastructure security. We are right up there on the Gartner Magic Quadrant. If you look at the competition, we are ranked much higher than people who are even 20 times our size. So our thing is capability led. Our investments are in capability build. Our investments are in sales and marketing. Our foray, wherever these investments are going, is not to be the price leader, it is to be the capability leader, and that's what is going to get us the market share. And as the market comes back in terms of reasonable demand, you will see not just the market share expand, but margin also expand.
Okay. I have one final question, and it's actually a set of two, if you will, Sandeep, humor me. But one, much unlike what the street or what everybody was expecting, there has been resilience on the global growth front. Now, while the belief might have been that with growth coming off, that a soft landing in the US and everywhere else, leading to some pressure on order flow or order win or deal wins for IT companies and product companies and tech companies like yours, is this slightly better economic performance globally, PMI numbers looking up globally, feed into you getting order flows slightly higher than earlier? Part one of my question is that. And part two is the slightly lower deal win flow for quarter four, is that an anomaly, and will it correct itself in the quarters to come for Persistent?
Okay, so I'll go the reverse order. So quarter four for us is January, February, March. Quarter three for us is October, November, December. Our biggest market, 80% of our revenues come from the US markets. So if you correlate the financial year closing for the US, it's October, November, December. That's where a bunch of our renewals come in. And hence the order flow, not just this year, many years, if you were to go back, is the same. Now, if you look at, Neeraj, are you there?
Yes, I'm right here, Sandeep. I'm listening to you.
Okay. Yeah. So if you were to look at the order flow for Q4, it was reasonably healthy, and I am pretty sure the pipeline is good. So as we go along, we are comfortable with the order flow as of this point in time.
Okay. And part one of my question, which is a global recovery, does it feed into your ability to bag more orders?
Yeah, absolutely. So if you look at our performance in a bad macro, if you look at our performance in the COVID times, just to remind you and your viewers, we grew 12.9%, whereas the whole industry, I don't think there were many companies which grew even single digit. So whether it was the COVID times, whether it is the last 12 months, if you look at 12 months gone by, the financial year for us, 14.5% growth, I would tend to believe in a bad macro, if we can deliver that, the chances of delivering better results in a good macro are better.
Well, confidence personified. Sandeep Kalra, thank you so much for taking the time out and being with us. I look forward to a slightly more engaging or a longer conversation, if you will, on the capability that Persistent might have and Indian IT might have around AI as well, a bit later on over the course of the next couple of months. But thank you for this earnings call today.
Looking forward to it, and thank you.
Thank you. And viewers, thanks for tuning in.